Look what I got. Good morning. It's me, Kenny Polcari, your host of the party. And yes, I have my Dunkin' Donuts coffee, and that is my third cup this morning. So I am all revved up. What is it today that we need to talk about? And unless you've been sleeping under a rock, you know it's all about the CPI, right? And that's coming out really only moments away at 8:30. Today is Thursday, February 10th, 2022, and stocks are not struggling, no matter what anybody tells you. CPI, like I said, is only moments away, and so global investors are awaiting. Fed officials yesterday trying to tamp down the angst, promising not to do anything to upset the markets. And the question today is, will the 10-year pierce 2%? Now, what may not happen today, but it is surely going to happen. And what are we having for dinner tonight? We're going to have the Cavatappi. We'll get to that in a moment. Stocks struggled to maintain gains. Oh, wait, struggled? Nah, not so much. Stocks continued to surge going into today's all-important Consumer Price Index report. The Dow gaining 305 points or 0.9%. The S&P's up 66. NASDAQ's up 295 points or 2%. The Russell added 38 points, 2%, while the transports added 300 points or 2%. The 10-year Treasury prices rose, sending yields lower, ending the day yielding 1.93. Oil rallied back to close north of $90 a barrel, and gold continues to advance, rising $6 to end the day at $1,834 an ounce. All this as the different Fed presidents attempted to calm the nerves of investors. In the morning, we heard from Atlanta's Rafi Bostic, who told us that the market had gotten a bit ahead of itself in defining the number of an increment of coming rate hikes. Talk of 5, 6, or 7 hikes was a bit like lighting your hair on fire, and then moves of greater than 25 basis points was likely not in the cards. Now, while he said that, he also said, though, that there isn't anything that is not on the table, which is kind of contradictory, no? But no one paid any attention. And then later on, we got Cleveland's Loretta Mester reiterating those views as she tried to pull back on the mania that's been created by the big investment banks, saying that she does not see a compelling case for a 50 basis point rise, and investors and traders in algos, mostly algos, loved it. Suddenly it's all about 3 and 4 hikes, and that takes about 60% of the fear off the table, and stocks surged. And now it's here, the day. The CPI report is due out 8:30 this morning. We've been talking about this for weeks now. The expectation for a strong number is out there. In fact, the report is expected to show an increase in year-over-year prices of 7.3%. It's no surprise. The last time we saw this was 40 years ago when Ronald Reagan was president. Just to be clear, that was 1980. After Jimmy Carter planted the seeds that led to the out-of-control inflation. Never mind the complete loss of national pride. Just think about the Iranian hostage crisis, but that's a whole nother story. Now, we saw markets come under pressure in January in anticipation of what this, along with a host of other macro data points, was about to reveal. The Russell falling into bear market territory, the NASDAQ kissing bear market territory, while the industrials and the S&P managed to take a beating but remained within correction territory. The big investment banks fueling that fire, dictating what the Fed needed to do in order to rein it in. 10-year yields rising from 1.5% to 1.96% in a matter of weeks, and the year-end target of 2.5% was now 3%. Growth stocks got hammered. Value stocks became the new favorites. Energy exploded higher, up 24% year-to-date, followed by financials up 5% year-to-date. Communications, tech, and consumer discretionary all leading the way lower, down 7, 5, and 7% respectively. Okay, so now what? Well, if the number today is what we expect, then I think we could just see the market consolidate a bit right here, right? Because it knows that. There's no surprise as it digests this recent surge. If the number is stronger than the expectation, then I would expect stocks to back off, because the conversation will then have to once again turn to why the Fed needs to be more aggressive. I would expect 10-year yields to kiss and pierce 2%, setting the stage for 2+% yields going forward. Say goodbye to 10-year yields with a 1 handle on it. Growth stocks will come under fire again, while value names will retreat but not fall out of bed. Big Americana multinationals that have solid dividends and pricing power will benefit. Pepsi is just one of those companies. This morning they reported and beat on every line. They raised their dividend by 7%, going from $4.30 a year to $4.60 a year, and announced a $10 billion stock buyback. They offered up strong forward guidance, and they're raising prices. Recall that they also raised prices in 2021, and the stock is quoted up $2 or 1%. Disney, another one. Although they're not currently paying a dividend, they are a big Americana multinational. They reported blockbuster numbers, big subscriber growth, doubling revenues from their theme parks, raising prices on everything Disney, and blah, blah, blah. That's how the story goes. And that stock is quoted up $10 or 6%. Now, if the CPI report is weaker than the expectation, I'm not sure how that could be, but if it is, then I suspect the algos will continue to push higher, as the conversation is going to be about how the Fed has this under control and that all the recent angst is nothing but noise. Growth stocks will surge and value stocks will retreat. The other data point to look at today is real average hourly earnings year over year and real average weekly earnings year over year. Now, last month, these reports showed a slight decline. What will today show? In any event, all you need to do is go to the store and try to go shopping. Then you'll understand what inflation is doing to your average hourly earnings. Now, on the other side, on a side note, you should really take to the internet and you should see this clip about this Bank of England official pleading with Britons to not ask for a raise when negotiating a pay package, no matter that inflation across that country is spinning out of control, because rising wages will only cause prices to rise even more as companies pass along the rising costs. The governor said businesses should assert restraint while negotiating pay packages with their workers to try to help keep inflation, already at its strongest level in 30 years, in check. When asked whether the Bank of England was asking workers not to demand big pay raises, Bailey essentially said, broadly, yes, in the sense of saying we do not see a moderation of wage rises. Now, that's painful. I don't want in any sense to sugarcoat that. It is painful, but we need to see that in order to get through the problem more quickly. So don't go asking for a raise, no matter that you have to pay 3 times more for food or energy. So I wonder how that's working over there, and I can't wait for Jay or Joey to ask that of hardworking Americans. And that's how the wage price spiral inflation thing works. Again, all you have to do is go back to the Jimmy Carter years, because we had the same thing then. This morning, stocks are churning in place. Dow futures up 64 points. S&P's down 5. Nasdaq's down 40. The Russell's down 5. The 10-year Treasury is yielding 1.94. And oil's up $1 or 1% at $90.80 a barrel. Don't kid yourself. Today is all about inflation, period, the end. And today's report will set us up for next Tuesday's PPI, Producer Price Index report. European markets are also digesting the news. All market centers are, over the last couple of days, because they've been rallying as well. All market centers are up between 0.1% and 0.5% as they await our CPI data. Bitcoin's trading at 45,000, Ethereum's trading at 3,200, both up slightly over yesterday, but down from overnight. In any event, it is at the time that you choose to market what you're going to recognize the price to be, right? Because it's just all over the place. The S&P closed last night at 45.87, up a whopping 65 points. The index blasting through intermediate-term resistance, readying to kiss at short-term resistance at 46.11. Now, right now, it does not appear to be in the cards today. But if the CPI surprises to the downside, then it is very possible. And if we do, or rather when we do, I will then expect that the markets are going to surge to the early January highs of 48.20 if we get through this resistance. If the report causes some angst, then I would expect to see the S&P back off and test longer-term trend line at 44.50. So sit tight, grab the popcorn. Patience is a virtue. Remember, you got to stick to the plan as a long-term investor. You can't get sidetracked, right? Call me to discuss. I'm happy to talk to you about it. Okay, so what do we have for dinner tonight? So we're having the Cavatappi with arugula and cannelloni beans. This is like a vegetarian dish. There's no meat in it at all, although you can always spice it up by throwing in Italian sweet sausage. But we were not going to do that today. Cavatappi is a kind of a macaroni that looks like a spiral, right? The word cavatappi is a combination of cava and tappi, whose literal translation means corkscrew. Because that's what it looks like, a corkscrew. Like I said, this is a vegetarian dish. It's easy to make and it's quick, right? You can make the whole thing in about 20 minutes. You want to bring a large pot of salted water to a rolling boil, put it on the back burner, always ready for when you need it. You want to add the cavatappi and cook it till al dente, 8 to 10 minutes. You know that, but not there yet. In a big saute pan, heat up some olive oil, crushed garlic, and sliced chopped red onion. Saute until the onion is soft and translucent. The red onion is the key for this dish. Now add in a can of cannelloni beans, juice and all. Just pour the whole thing right in there, stir it to heat it up. You don't have to cook the beans because they're already cooked in the can, right? So just put them in there because you just want to stir them up. You want to get them warm. Now add the pasta to the pot. Now add the arugula and stir. In with the beans, add the arugula to the beans and the onion. Stir it. The arugula is going to wilt, right? You want to strain the pasta, saving a mug full of water. Put the pasta back in the pot. Add a little bit of the water back just to re-moisten the pasta. Now add the beans and the cannelloni and the onion to the pasta. Stir it to mix. Toss in 1 or 2 handfuls of grated Parmigiana cheese. And then serve immediately. That's it. It's a simple dish. It's all vegetarian. Like I said, if it takes you more than 20 minutes to make, you did something wrong. It's simple, it's easy, your family's going to love it. It's not filling, it tastes great, and it satisfies your need for pasta because, you just take one look at me. I love pasta, but that's beside the point. In any event, the day is getting started. The CPI is only moments away and the market awaits. So until tomorrow, take good care.